thanks to the organizers. So this paper is co-authored with Mathieu Aubry, Roman Krause, and Christoph Spengers. We are trying to apply machine learning to value real assets. So that's a problem that's been discussed a lot in the news. So in particular, our setting is going to be applying these techniques to the art market to check whether machines can actually predict the prices at which art is going to be sold in auctions. And we have human estimates by the auctioneer to compare with. So, but this applies to other problems as well that are familiar to you, like the real estate market, where you have machines trying to value real estate assets, and you also have human estimates, and they're competing in the same space. So we're going to have, so to summarize, we're going to apply this to the auction market, art auction market. So we're going to find that actually machine learning is helpful in valuing art, even when we condition on the auction house pre-sale estimates. And machine learning is going to be particularly helpful to value artists that have relatively volatile prices. We're going to identify systematic bias by the human experts in these markets and show that machine learning can help overcome some of these biases. All right, so we're going to use this Bloom Art Sales Index. The time period is 2008 to 2015. We have 1.1 million transactions in this database, 350 different auction houses. And we have all kinds of information about this transaction. So we have the artist, the artwork, including the image, which we are going to use in the machine learning estimation. And we have all the auction data as well, the estimate and the price data. So what we're going to do here is going to use 2008 to 2014 as our training set, and we're going to use this the results of this estimation to predict the 2015 data. So we're going to call this pre-sales estimate, the auctioneer, the human expert estimate, we're going to call P hat AH, auction house. And then we're going to have estimates from machine learning. The first estimate only uses the text information, like the size of the painting and the artist. And then we're going to add image to our estimates, and that's going to be the PIMG machine learning. So we're going to take the log of the logged average of low and high estimates to be our human expert estimate. And so Sotheby's says that these are estimates should reflect the opinion about the range in which the lot might sell at auction. Now, there are reasons here to believe that the auction house can do better than machines. For example, one may think that these estimates actually will affect the bids because they are publicly available. So once investors in this market see the estimate by the human, that can actually affect their bids, and therefore they may be able to perform better than machines. Not only that, auctioneers have some information here that we're not giving to the machine because we don't have. So the artwork condition and the provenance of the artwork. So we're going to apply neural networks to estimate our machine learning model. So the basic valuation in terms of text, we're going to have artist and nationality, birth and death year, creation year, width and height, markings, title, materials, and year of sale. So on top of that, we're going to add the image to the estimation. And here's an example. So this is Georgia O'Keeffe Misty Road painting that was sold at Christie's in 2015. So the auction house estimate was $200K. The machine learning estimate was $1 million. And the estimate, once you add the image to the machine learning, the estimate goes down to 423. So the computers did not like the image. And it turns out that this painting sold at hammer price for 270K. So the human was closer to the actual estimate. So here is a distribution of valuations by the humans, experts, and the prices at which eventually this art piece is sold. And this is the computer valuations. As you can see already from here, you can see that there is more mistakes by the computer than the human. So another way to see is a scatter plot around these valuations and prices. And you see that even though it's a pretty good fit here, there is clearly more noise in the computer machine learning than in the auction house estimate for the same painting, for the same art. Now, if the computer cannot beat the human, if there is more noise in the computer estimates, can we have the computer assist the humans in some ways and improve? Would that improve the valuation? So if we add to our regression on predicting the prices, not just the auction house, but also the automated valuation, we'll see that these are significant, meaning that the computer helps explain the prices at which this art is going to sell. Now, the R square increases in principle by just a little bit, if you look here. However, that's 3% of the unexplained variation increase and 4.1% if you add the image. So that could be a significant improvement in this estimate. Not only that, the machine learning techniques can help predict the buy-ins, the chance of buy-ins. This is when the price that's offered by investors is not enough, is below the reserve, which means the auction house will actually buy the art piece. So what we see here is that when we add the computer, we can get predictability in the chances of buy-ins by the auction houses. So the computer data helps us predict. The computer estimates help us predict whether the art is going to be bought in by the auction house. Now, this is for the overall, but we can look cross-sectionally if there are particular subsets where the machine learning is particularly useful. And when we look at situations for artists in which there is high price uncertainty versus low price uncertainty, what we find is that the machine learning is particularly helpful for artists for which there is a lot of volatility. There is a lot of uncertainty about the price at which they're going to sell. We also look at overcoming biases in estimation. So for example, in these real asset markets, we know that agents are reluctant to adjust appraisals or selling prices downwards. So what we look at is artists with low average returns, recent average returns, versus artists with high average returns. And what we find is that machine learning performs better for those artists that had very low returns recently. So the auction house human experts are still assigning high prices estimates, and the machine learning will fix that bias. So we will overcome this tendency not to adjust given recent data. So we also look at whether the machine can actually predict when the human experts are going to make a mistake. So we take the difference between the actual price and or the log of the price and the estimate by the humans, and we have the machine predict whether they are going to be different. And the highest deciles indeed have a higher distortion between the predicted price and the actual price. So computers can actually figure out when the mistakes are going to happen, for which pieces the mistakes are more likely to happen. To conclude, so we find that machine learning helps predict prices and buy-in probabilities in this art market, which is a complex task, I would claim. The machine learning techniques are more helpful when the artwork is harder to value. There's more uncertainty, more volatility for that artist. And it can actually identify and overcome some human biases, such as this tendency to ignore recent data and slow adjustments of posteriors. Thank you.